Thank you for joining us for our quarterly member webinar. My name is Jolene Olson. If you have any questions regarding your membership or the TechCharts website, please send your inquiry through our contact form that is located in the upper right-hand corner of our website. This and all past member webinars can be found on the member page under Premium Members, Educational Videos, Member Webinars. Thank you again for joining us today, and welcome, Aksel.
Hi, Jolene. Hi, everyone. TechCharts members. It's a pleasure again to meet. This will be our fifth year with TechCharts membership service, and we're reviewing again the breakout signals, breakout alerts over the past 1 year. It's an exciting time to see what worked, what didn't work, what kind of market cycles we have been through. And as we accumulate more data, we get a slight edge in terms of managing our positions and investments with classical charting. I hope those will help you as well. Now I will start with the statistics that we've been keeping for the past 5 years. The first table, the top table, is basically the chart pattern reliability numbers starting from May 2007 till the end of April 2020. There are still some breakout signals that haven't reached their price target or the chart pattern negation level. So basically, for our new members, to give you an idea about what this is all about, we have 2 levels on price charts, and here you can see it. The chart pattern negation level is a minor low inside the pattern, and then we have the price target calculated from the chart pattern itself, taking the depth of it and adding it to the breakout level, we get a chart pattern price target. We have a breakout confirmation level calculated using the guideline of Edwards and McKegg, which is a 3% breakout confirmation above the resistance level. This has to come on a daily close. So what we look is irrespective of the stop loss, because we assume that stop loss will be different for each trader or investor depending on your risk profile and other factors. So this is totally irrespective of the stop loss. We look at 2 levels. The price either reaches the price objective or the price fails and reaches the chart pattern negation level. The price can fall back to the chart pattern boundary as a retest, not reach the chart pattern negation level, recover and continue and reach the price target. This will still be considered a successful breakout, irrespective of what happened in between. There are different educational videos I have uploaded on the members site. For example, some are using the giving ideas about how to use ATR-based trailing stop losses and so on. One can look at those and get some ideas about possible stop loss management and trailing of positions. But this statistics basically depends on how the chart pattern has performed, irrespective of any kind of trading tactic applied on it. So if you look at the success rates over the past 5 years, we have accumulated a good amount of breakout signals, 1,167 chart pattern breakouts, out of which 699 reach their price objective. That gives us almost 60% success rate on the overall patterns that we're looking at here. So what I have done is I have simplified it a little bit and started looking at those chart patterns, which are the widely followed, widely known patterns. You can see that I give a lot of weight to patterns with horizontal boundaries. In this case, even the head and shoulder formations, I try to pick the ones that have clean horizontal boundaries. Sometimes I get questions on, what about this chart pattern? it has a downward sloping neckline. Does it work the same way? Yes, it should work the same way, but it is a little bit more difficult to place stop loss above or below the chart pattern boundary when you have a downward or upward sloping boundary, and the retests also can become problematic to define exactly what level you might be wrong on this or to protect your capital. So we have, again, head and shoulder top, rectangle, and head and shoulder bottom, keeping their top three positions in terms of success rates. We have 63.9% for head and shoulder top. And then we have the rectangle, I would say the most statistically significant number because of the number of opportunities that we have featured, out of which 302 of them were successful with a success rate of 63.7%. And then we have the head and shoulder bottom following with a 63.6%. Now, if we go all the way down, you can see the symmetrical triangle at the bottom of the list, which is something that we have always been discussing, that symmetrical triangles are more difficult in terms of breakouts. Success rates are, the pattern is not that reliable because once you see a breakout, the price can easily get rejected at the minor highs and can lose the momentum. What we're looking for here with those chart pattern breakouts is that to capture the first momentum period that translates into a trend. So with symmetrical triangle, we have this handicap of finding immediate resistance at the minor highs. So we look at the fourth one is descending triangle, which is not that bad, 61.1% success rate. Again, descending triangle and ascending triangle are the mirrors of each other. Descending triangle is a bearish chart pattern. Ascending triangle is a bullish chart pattern with clean horizontal boundaries. So these are following each other in terms of success rates. Now, if you look at the last 1 year, starting from May 2021 till the end of April 2022, it's been a challenging time because the markets have been rolling over and it's been a choppy period. The rollover process was choppy, and then the following trend period, which was on the downside, has become volatile as well. What we want to see is we want to capture trend periods. We want strong trends for breakouts to succeed. So basically what we're going through is that type of a period, which I will relate to now in different phases of the last 5 years. We are looking at a 50% success rate, head and shoulder top 66.7, and then we have the descending triangle at the same success rate, but then the occurrences are not enough for us to make a statistically significant assumption here. But bear in mind that we have the year still going on, which I will discuss a little bit more about the numbers in a while. So we have the cup with handle at 59.5%, ascending triangle at 52%, and the rest has been slightly below 50%. And in fact, rectangle, which has been the most reliable chart pattern, has performed not that good over the past 1 year. This is due to the last 2-3 months. Even the best looking rectangles have been challenging. Now we've discussed about the labelings on the charts. Now let's look at these cycles. What happened over the past 5 years? What kind of market environment gave us much more reliable breakouts? Now, obviously, 2017 has been a great year. This type of environment where you can see a clean trend, almost most of the breakouts are completing and rallying their price targets. So we had 144 breakout opportunities. This was starting from mid-year, the statistics. And out of 144, 103 reached 71.5% success rate. Now, this has been a great environment for chart pattern breakouts. Following that, which you're probably seeing a similar environment right now, market environment, where the rollover is choppy, and then we've seen a slight downtrend, which gave us several short ideas in this period. We had a success rate of 50.5%. Out of 208 ideas, 105 reached their price target. Now that was followed by a nice trend period, which gave us 61.1%. This is basically almost the 5 years average. So we went back to the average, and initially a nice trend, and then even on the MSCI All Country World Index ETF, we had a nice chart pattern development, and that followed by another trend period. Now, as you can see, when you have those type of trend periods, and the overall trend has been up, now the next successful period was a sharp sell-off, which we have seen several short ideas completing successfully, and then a strong uptrend as well. So these type of strong trend periods are giving us good opportunities and reliable breakouts as well. So during this period, 66.9% was the success rate. Out of 272 ideas, 182 reached their price target. Now the problem started with this weak uptrend and then the rollover. So we have dropped to 55.6% success rate, and then so far it is 52.6%. Still, we're holding about 50%, which is still better than the 2018 success rate. But clearly, I can say that if this trend is going to continue lower, we are likely to have several short ideas coming in your way, and possibly reaching their price targets in a short period of time, helping the success rates to pick up with the short ideas. If we see a sharp rebound, that will work for us as well. Still, the year is almost halfway through, so we still have another 6 to 7 months to go. And that would be interesting to see what kind of chart patterns come in our way. Given that we are below the long-term average, I'm leaning more towards seeing short setups. But if we see a sharp reversal from here, the way we have seen in the beginning of 2019, that will show up in the type of patterns that appear on price charts. Now, you remember that I've been discussing about the type of breakouts. This is to give a quick update to our new members. So what I have done is I've received a lot of questions about the stop loss placement, how to manage the stop loss in those chart patterns. Unfortunately, one size doesn't fit all. So everybody has their own way of managing the stop losses. So what I'm trying to give you here is how the chart patterns in general have performed after breaking out. How much of a challenge was there around the chart pattern boundaries? So type 1 breakout, after the breakout confirmation, never pulls back. So we don't see a retest of the chart pattern boundary, which means given that we act on the breakout, if you're on board, this is a easy ride towards the price target. And I always discuss this, that once you realize that it's an easy trade, it's been a strong move, it's likely that the price will continue much higher because there is good momentum so far in the stock. So you can actually ride the trend with portion of the long position that you have accumulated at the time of the breakout. If we look at the other type of breakout, this is a breakout with a retest. So once the breakout is confirmed, price pulls back to the chart pattern boundary, but any stop loss that is placed in this wide area is not challenged. So if you are actually managing those breakouts with really tight stop losses and aggressive risk management, type 1 breakout and type 2 breakouts do not even challenge your stop loss right below the pattern boundary. So if you look at those numbers, type 1 and type 2 can give you an idea about what to expect on average from those type of breakouts and formulate your strategy around it. Obviously, if you're using a wide stop loss, you can see that even type 3 breakouts will not be an issue because they, in the next slide, we're going to see they retest. It's a hard retest. They dip below the chart pattern boundary and then recover. If for those who have a tight stop loss, we have a re-entry strategy. But for those that have a wide stop loss, those do not need any kind of management as they recover and reach their price targets. So if we look at type 2 breakout, a pull back to the chart pattern boundary and then continuation to the price target. Now with the type 3 breakout, the breakout takes place, price pulls back to the chart pattern boundary, dips below the boundary. If you have your stop loss here, you probably got stopped out. So what do we need? We need a recompletion of the pattern. So the price needs to close above that chart pattern breakout confirmation level for a re-entry and to be able to capture the second part. Now the type 4 breakout is a failed breakout. If you have the chart pattern negation somewhere as a minor low inside the pattern, and once that level is reached, the pattern is negated, and after that, even if the stock recovers above the chart pattern boundary, we don't accept it as a chart pattern that is intact. So as long as chart pattern negation level is not reached, chart pattern is still intact. So if we look at all the last 1 year's signals, and we categorize them as type 1, type 2, type 3, and type 4. These are the numbers that we're looking at. So that 50% success rate of the patterns, out of that, so basically we have 121 of the 242 signals reaching their price target, and they are divided as type 1 49, type 2 48, which makes 40% of all the signals. And then 24, type 3, is also a successful breakout. That is 9.9%. So when these two are added together, we get a 50% success rate on the chart patterns for the past 1 year, and then 121 failed breakouts with a 50% success rate. So here basically, if you have the tight stop loss and you're playing those breakouts, 40% success rate has been 40% of those didn't even challenge the chart pattern boundary during a pullback, and 24 of them needed a re-entry if you're placing tight stop losses. Now let's go through different examples over the past 1 year. This is an interesting exercise. I advise our members to look at the breakouts page. Breakouts page has all the chart pattern breakout signals going back to 2017 as before and after. So it's a great study area and also a place to keep track of what's happening with the chart pattern. Once a chart pattern breakout reaches the price target or the negation level, an update is posted on this page. So this was Northeast Bank. In the end, that from NASDAQ. It's a 4-month-long ascending triangle. As we go through the charts, I will again highlight the importance of looking at few of the qualities. For example, a horizontal boundary with minimum 2 tests, third test, and then the fourth one is the breakout. Breakout confirmation is here. We place the chart pattern negation level to the minor low inside the chart pattern itself. So this is the low, that is the negation level. And your stop loss can be right below the chart pattern boundary, below 30.8, somewhere between 30 and 30.8. So the distance between the confirmation level and your stop loss will define your risk. You can use the chart pattern negation level as your protective stop, but if you're thinking that this is too wide, given the chart pattern price target, you can always play it more aggressive by placing a tight stop loss below the chart pattern boundary. Now, after the breakout, you can see that price just rallies to the price target in consecutive daily closes. And this is type 1 breakout. So almost no pullback. In a good market, we're likely to see those type of breakouts. We can never know if it's going to be a good market or a volatile market. So what we are advising is to act on the breakout confirmation rather than waiting for a pullback. But obviously, there are different strategies, and a retest, an entry during a retest can also be applied. Here is another ascending triangle. This is categorized as type 2 breakout. So 1, 2, 3, more than 4, 5 tests of the chart pattern boundary. This is the breakout day. And then we see the pullback to the chart pattern boundary. So any stop loss, again, below the chart pattern boundary is not challenged. And then price recovers and reaches the price objective at 89.4, another US equity. And this is an ascending triangle, a textbook 3-month-long ascending triangle. Now, what happens during type 3 breakout? Type 3 breakout, as I always say, is one of the most challenging because it needs a re-entry strategy if you're using aggressive risk management and tight stop losses. So this was a 7-month-long ascending triangle from South Africa. And you can see the several tests of the pattern boundary. And then here we get the breakout confirmation. But right after the breakout confirmation, price starts pulling back to the pattern boundary and drops below the horizontal line. Now, when we got the breakout confirmation, we placed the chart pattern negation level to this low. That's the minor low inside the chart pattern. So if you're just looking at the chart pattern negation and that is your stop loss, you were not challenged. And in fact, price actually consolidated around the pattern boundary, forming another ascending triangle, which completed on the upside. So these are actually, for the longer term investors, these are actually great chart patterns because it gives you an opportunity to enter in tranches. So this is your breakout confirmation, and then you have your wide stop loss here, and then stop consolidates, and you can also accumulate a little bit more with this breakout to basically capture the uptrend. But if you're using a tighter stop loss and you get stopped out here, you're waiting for another close above that breakout confirmation level, which comes somewhere here. That is your re-entry with a stop to this low. During this retest, you're not challenged. During this retest, you're not challenged, and then the price reaches the price objective. So this is type 3 breakout. As you can see, if you're using a tight stop loss, it needs a re-entry strategy and to manage this breakout closely. In fact, type 1 breakout, type 2 breakout are the easier breakouts to manage if you're just applying a protected stop loss and letting the chart pattern play itself. We have the type 4 breakout. These are failed breakouts. And you can see that several tests of pattern boundary. Here we had a premature breakout which didn't confirm the breakout with the daily close, but the daily close was confirmed here. But after that, we put our chart pattern negation level at 15.7. Price basically collapsed and negated the pattern. If you had stop losses close to the pattern boundary, you got stopped out, and this stock never allowed you to push for a re-entry strategy. It didn't even recover above the pattern boundary, so this was basically a failed breakout. Now we're looking at cup with handle. Cup with handle is a bullish continuation chart pattern. And what I like to see with cup with handles is that the handle part, it is great if we can see another chart pattern forming. So in this case, we had a symmetrical triangle forming as the handle part. So we have this 7-month of cup with handle continuation, the cup and the handle here. The symmetrical triangle is well defined. The breakout takes place, the confirmation, and then after that, stock rallies to the price target. So this is type 1 breakout. If you had your stop loss placed below the chart pattern boundary, it's a clean, strong trend that you have captured without even seeing a retest. This is type 2 breakout. Again, as I said, I like to identify those. A cup and a handle. The handle in itself is a chart pattern. Here, in this case, it was a rectangle. This is a company from France. So the breakout takes place at the same time from the rectangle and the cup with handle. Breakout confirmation. Chart pattern negation level is placed at the lowest point of the handle. And then after the breakout, we see a retest. Doesn't even challenge the pattern boundary, and then continuation on the upside. This is a weekly scale price chart. So every bar is 1 week. And the price target was met with a good uptrend after the breakout. So this is type 2 breakout. Now we are looking at type 3 breakout here. Clearly the more challenging one. 4-month long cup with handle, and the handle, you can see it was more like a symmetrical triangle. The breakout takes place. This was a company from Turkey. The breakout takes place. The stock moves up a couple of days and then sells off. The pattern boundary fails to hold the price. So the chart pattern negation at 7.46 is not challenged, but any stop loss that was tight stop losses below the pattern boundary is definitely challenged. And then it requires a re-entry strategy if the price recovered. And the price recovered above that boundary. And we got this confirmation here, and the price continued higher. So this is type 3 breakout that required a re-entry. And it's in the statistics categorized as type 3 breakout. And then we have the failed breakout. Again, I featured a 15-month long cup with handle, with the handle part being a rectangle. Breakout confirmation. After the breakout confirmation, a couple of weeks of consolidation around the boundary, but after that, a sharp sell-off due to market conditions, and chart pattern negation was met. So that was type 4 breakout. And we're looking at now head and shoulder bottoms. Head and shoulder bottoms are bottom reversal chart patterns. They are one of the most reliable ones. And as I always say, the 200-day moving average is my trend filter. So I want to see those chart patterns completing above the 200-day moving average, or the breakout taking place above the neckline or above the chart pattern boundary at the same time as it breaches the 200-day moving average. So we can confirm that a change in trend is taking place, or we can confirm that we are actually investing or trading in the direction of the overall trend. If there is a breakdown, this is the opposite. So we want to see breakdowns taking place below the 200-day moving average. So we had, it's not plotted on this price chart, but we had the 200-day moving average around the neckline. So the breakout, a strong breakout takes place, rallies, pulls back, and then continues to the price target. So this is type 2 breakout. Over the past 1 year, we haven't seen a type 1 breakout. That this is as close as a type 1 breakout gets, but it didn't reach the price target. It pulled back and then rallied. So I'm categorizing it as type 2 breakout because it gave an opportunity to enter for those who have a strategy of entering during pullbacks. So if you are applying that strategy where you are waiting for a retest, if you look at type 2 breakouts, you can expect that all of them had similar pullbacks to the chart pattern boundary and rally. This is another type 2 breakout. So if we assume that this is almost type 1 breakout, a type 2 breakout would be spending more time around the boundary and getting more closer to the chart pattern boundary. So a Japanese company, again, you see the 200-day moving average here. The breakout is taking place above the long-term average. So we have the left shoulder, head, right shoulder, chart pattern negation level should be placed at the low of the right shoulder. So we see that the breakout is taking place. After the breakout, consolidation, a pullback to the pattern boundary. So any stop loss that is below the chart pattern boundary is not getting affected. And then price continues and rallies to the price target. Type 2 breakout, Japanese name. Now we are looking at type 4 breakout. Left shoulder, head, right shoulder. Now this on a 2-month long head and shoulder bottom was breaking above the 200-day moving average. That's why I like to future this. A similar longer term head and shoulder bottom formed here earlier. So it was a carbon copy of the bottom reversal, but in a shorter term time frame. This time it failed. So the breakout takes place, pulls back, fails to hold above the pattern boundary, and then reaches the chart pattern negation level. So this was a type 4 breakout from the head and shoulder bottom reversals. Head and shoulder continuation. Now, head and shoulder continuation is like head and shoulder bottom, but it is in an uptrend. So the prior trend is upwards, and then we see that consolidation that actually, if it was not this volatile, could have become a rectangle. So this volatility, which formed the head, breached the low of the left shoulder, that gave it the shape of a head and shoulder bottom. So here we have the head and shoulder continuation with left shoulder, head, right shoulder. The low of the shoulder becomes our chart pattern negation level, similar to the head and shoulder bottom. Breakout confirmation takes place here. Price rallies to the price target, type 1 breakout. So after the breakout confirmation here, any stop loss below the pattern boundary is not challenged, so you can easily size those type of breakouts comfortably. This one is a stock from India. Again, a nice head and shoulder continuation, though I missed this opportunity to be featured as it completed the head and shoulder continuation, but I have covered it as a flag. So this was an upward sloping flag, and the pattern looked so good that I posted it on the breakout alerts as a breakout from a flag. We don't have that, we're not keeping that statistics, but I'm counting it as a head and shoulder continuation completion. So left shoulder, head, right shoulder, chart pattern negation level. Breakout confirmation takes place here, pulls back, rebounds, pulls back. So the chart pattern boundary is intact. So this is type 2 breakout, and then short-term consolidation completes on the upside and price reaches the price target. So this is a type 2 breakout. We look at type 3 breakout on head and shoulder continuation. A lot of energy stocks were covered over the past couple of months. Most of them were successful due to the trends in the energy sector. So we have the left shoulder, head, right shoulder. Here even you can see during the formation of the head, we had a nice minor head and shoulder bottom. Left shoulder, head, right shoulder. So this head and shoulder continuation had a clean horizontal boundary. Breakout confirmation takes place here. And then stock, this is a weekly scale price chart. Stock pulls back a couple of weeks and breaches the pattern boundary. So any stops are probably triggered here, but then the stock doesn't go back to the chart pattern negation level as a failed breakout. It recovers and offers a re-entry signal, and then price reaches the price objective. So this is again considered to be a type 3 breakout due to its challenge to the pattern boundary, the hard retest. Failed breakout, type 4 breakout, left shoulder, head, right shoulder. This is a stock from France, a clean horizontal boundary. The breakout takes place here, confirmation. But after that, the stock fails to hold above the pattern boundary and goes back to the chart pattern negation level and categorized as a failed breakout. Now we look at rectangles. Rectangles is one of my favorite chart pattern because it is much easier to identify on price charts, and also they're more frequent, be it in an uptrend or in a downtrend, as a continuation or as a reversal. We have seen many reversals over the past couple of months, rectangle reversal patterns. And you can also see the horizontal boundaries clearly on rectangle chart patterns. So here we have a US equity, 1, 2, 3 times test, 4, 5th, and then the breakout confirmation comes, and then price continues to the price target without looking back for a retest. So chart pattern negation was here. Any stop loss again below the chart pattern boundary was not challenged. Type 2 breakout, rectangle acting as a reversal. So this rectangle here formed as a bottom reversal, and the 200-day moving average was broken on the upside at the same time as the breakout completed from the rectangle. Breakout confirmation, rally, pullback, rally, pullback. So this consolidation has been a little bit challenging, but if you had your stops below the pattern boundary, it was not challenged at all during this breakout and rally. So this was type 2 breakout due to the retest and the opportunity that it offered for strategies that enter during pullbacks. We have a type 3 breakout here, a challenging one. Rectangle acting as a top reversal. Here, this is a premature breakdown. Didn't close even below the pattern boundary, but after that, we have seen this breakdown taking place with a breakdown confirmation here. But right after that, the stock rallied sharply, breached the pattern boundary, didn't reach our negation level. This was a subjective level because the minor high inside the pattern was not that clear. So as I'm saying, chart pattern negation levels with rectangles, if you cannot find a minor high or minor low inside the pattern, can be a little bit subjective. Without reaching the pattern negation, recompletion took place and price reached the price target. So this was type 3 breakout, a stock in Italy. Now we look at type 4 breakout, India, Delta Corp. I mean, this was a perfect rectangle, but even the perfect rectangles can fail. So bear in mind that while we're looking at chart pattern reliability, this is a long-term statistics that over a couple of trades you might not be able to capture the overall edge that the breakouts from the rectangles offer. So if you look at 1, 2, 3 tests, the fourth one, the breakout takes place, but then immediately the stock reverses, reaches the pattern negation, again a subjective minor low inside the pattern boundary, and categorized as type 4 breakout. This was a failed breakout over the past few months. Now we look at descending triangle. Many descending triangles are appearing at the tops, and they are acting as reversals. So we have to be open to those possibilities, even though descending triangle is considered to be common in a downtrend as a continuation chart pattern, but they are acting as reversals as well. This was a Germany listed stock, Delivery Hero, 11-month long descending triangle on a weekly scale price chart. So the lower boundary was tested several times, breakdown takes place, and then the stock resumes without even looking back and reaches the price target. So type 1 breakout for a descending triangle like this. And then we have a type 2 breakout. This is a continuation chart pattern, 2-month long descending triangle from Japan, several tests of the pattern boundary, downward sloping upper boundary, and then we have the chart pattern negation level at a minor high inside the pattern. Breakdown takes place, pullback. During this pullback, the stock is being categorized as a type 2 breakout, but the pullback is not challenging the pattern boundary, so no breach of the pattern boundary on the upside, and then price collapses to the price target. So this was type 2 breakout. Symmetrical triangle. As you know, this was one of the challenging patterns in terms of reliability. So what I'm doing is that I'm trying to future those that again have several tests of pattern boundaries and also as horizontal as possible, so that the boundaries do not have that steep slopes. And you can see that those are not that steep boundaries in terms of symmetrical triangles. So we have several tests of the boundary, breakout takes place. After the breakout, price rallies to the price target, pulls back a little bit, and then reaches the price objective. This is type 1 breakout. So any breakout, any stop loss that is placed below the pattern boundary at below 11.85 is not challenged. Chart pattern negation level is the minor low inside the pattern boundary. So this was a type 1 breakout. We have a stock from India, a nice symmetrical triangle, 1, 2, 3 touch points, and then the fourth one is a breakout. After the breakout, we see a retest, rally, retest, nothing falls below the pattern boundary. So you see, for example, at the time of the breakout, if you place a stop loss inside the pattern boundary, given that the pattern boundary is sloping downwards, and this retest is still considered to be a retest of the pattern boundary, your stop loss is in danger. And with horizontal boundaries, you don't have this situation. And it is really difficult to know, is this a retest that is going to challenge the stop loss, or it's just a part of a failure that you're okay to exit. So that's why I'm giving more weight to the breakouts that take place from horizontal boundaries, because they are easier to manage in terms of protected stops and retests. Even though this was a retest to the pattern boundary, it came below the breakout level and then rallied to the price target. So this is type 2 breakout. symmetrical triangle that's set up nicely above the 200-day moving average. Breakout takes place, and then we see a pullback and a breach of the boundary, and then recovery and recompletion. So type 3 breakout, the second chance can be given to those breakouts to capture the following trend period. Reaches the price target, type 3 breakout. A failed breakout here. From Denmark, a clean uptrend, an arguable trend line, but when it is combined with a 200-day moving average, it formed an inflection point. So the symmetrical triangle with its boundaries, chart pattern negation at the top, breakdown confirmation takes place, but then the stock recovers above the 200-day moving average, above the boundary, and reaches the pattern negation. So this is a failed symmetrical triangle breakdown that is classified as a type 4 breakout. Head and shoulder top, another reliable chart pattern. In 2018, I've seen more head and shoulder tops forming in that downtrend than the current reversal. The current reversal formed more rectangles and descending triangles, more rectangles actually, that formed at the top. I don't know why would that be. Probably it was not a market that have extended its reversal. I'm not sure about that, but I have captured more head and shoulder tops in 2018 than now. But this was one of those over the past 1 year, a clean head and shoulder tops. Left shoulder, head, right shoulder. Right shoulder formed below the 200-day moving average. So this is perfect setup. Breakdown takes place, breaching the upward sloping trend line. So breakout confirmation, sells off almost like a type 1 breakout, but then we see a retest and then continues lower. And this rebound and retest and continuation takes place below the 200-day moving average, confirming the downtrend. So this is considered to be type 2 breakout. Now we have type 4 breakout here. Left shoulder, head, right shoulder. Again, please pay attention to the 200-day moving average, how the breakdown is taking place below the 200-day moving average. Usually, trends start like this, downtrends start like this, but obviously failed breakouts cannot be avoided. But over the long term, with many trades taking place, the edge you will capture if you go in the direction of the overall trend. So this was a failed breakdown confirmation, and then price recovers and reaches the negation level in a rally to the price chart pattern negation level. So this was considered to be type 4 breakout. And this finalizes our presentation for today. I'm happy to get questions. Before we finalize it, actually, I want to give you a snapshot of the long and short ideas. By going back to that slide, I'm sure some of you would have a question on this. Let me go back to that market phases slide. Okay, so we have discussed about 2018, how the success rate was around 50.5%, and now we are again in a period of possible downtrend starting and below the long-term average, and if it develops into a further downtrend, we're likely to see more short setups. Now in 2018, during this period where we have seen many stocks, even though the index was moving sideways, we have seen stocks breaking down, and this part actually turning into a more severe correction. In 2018, we had 45 short ideas in 208 ideas. So that was around 21% of the total ideas were short. And so far here, we have over the past 1 year, this period, over the past 1 year from May till now, we have 32 short ideas out of 275, and that is 12%. Over the past 5 years, the average of short ideas is around 12%, 11.5. So we are around average number in terms of short ideas. That means if we get more downward move from here, more short ideas are likely to appear, similar to 2018 correction. So this is something that I want to discuss before we move to the questions. Slide 5, I only look for patterns that begin with a pivot point countering the preceding trend. However, I see on slide 5 that you have labeled the pattern beginning with 2 lower pivots after an uptrend. Let's go to slide 5 here. So that begin with a pivot point countering the preceding trend. Okay, so I see what you're saying. To take basically from here and here. So the question probably is saying that why am I taking it, extending it to here? There is no strict rule around drawing the boundaries. The idea here is to have those well-defined horizontal lines and to be able to identify the levels that market have recognized, because that's the key. I think sometimes we draw the boundaries and those boundaries are not actually recognized by the market participants. So yes, you can take it from the previous low here with excluding this, and it would not change the overall interpretation of this pattern. Slide 8. Let's go to slide 8. Okay. In a type 4 breakout, if price reverses down and the negation level is hit, but the price then rebounds, recovers, and then breaks out again, why is the chart pattern destroyed? Because the chart pattern negation level is placed in such a place that is too deep inside the pattern, and after that the chart pattern is not behaving according to what it should. Again, don't forget that this especially with rectangles, it could be a subjective level, but for example with symmetrical triangles or with head and shoulders or with cup with handles, for example the cup with handle would have the chart pattern negation at the low of the handle. So if it is breaching that level, then the pattern is not a cup with handle anymore. It's morphing into something else. If you're looking at a symmetrical triangle and you have identified the last swing low inside the pattern boundary, and then price breaches that level, that is again violating the chart pattern, the guidelines of the chart pattern. If, for example, in a head and shoulder bottom, the low of the right shoulder is the chart pattern negation level. And these are not subjective levels, because once the low of the right shoulder is breached, then you can start playing it as a head and shoulder failure. And I'm accumulating more and more statistics on head and shoulder failures, and the success rate is really good, and I'll be discussing those as well. But then you're basically breaching the low of the right shoulder, which negates the chart pattern. So even if the breakout takes place after that, that pattern is not what you have identified. It's something else. It probably is turning into something else. How is the breakout confirmation price calculated? This is a guideline that was discussed in Edwards and McKegg, and I'm using that. So if you have the, for example, on this chart 89 as your chart pattern boundary, you add 3% above that pattern boundary, and that is your breakout confirmation level. So if price closes above that level by 3% margin, you have a breakout confirmation on a daily basis. You can use different levels. For example, with FX, it could be, it probably is much lower. So 0.5% to 1% should be your breakout confirmation level. With the cryptos, you can use a much wider 4 to 5%. But don't forget, this is a guideline. It is not a rule. So this can change if you want to use a different breakout confirmation level. I'm taking the 3% that Edwards and McKegg in their book discussed. Question 4. Okay, Peter Brandt's book, Diary of a Professional Commodity Trader, is a must-read, by the way. This book opened my eyes to classical charting back in 2011. The applications of chart patterns. Peter has done a great job in putting his thoughts into this book. His first book is also amazing. Let's look at the question. Lessons from 21 weeks of real trading. He described the average duration of some classical patterns. My question is, do you have your own durations? Yes. What I'm doing here is, with the TechCharts membership service, is that I'm futuring 2 months to 24 months chart patterns. So nothing shorter than 2 months duration and nothing longer than 24 months duration. And the patterns that you're seeing in those statistics are following this. Do you take profits once a chart reaches its target, or do you let the trade run until you see signs of reversal? So here's the thing. Over the past several years, I have figured out that type 1 breakouts, which are basically the breakouts taking place and it reaches the price target, those are the ones that have more juice left after the price target is met. So if I get to ride one of those, I try to stay as much as possible in the trade and take partial profits, but let the larger part of the position to remain in the trade. So if you realize that after the breakout there hasn't been a retest and the price is very close to the price target, then you can start formulating your strategy around it, that highly likely price will exceed the price target, and you better not take all the chips out of the table. How many concurrent positions do you recommend a breakout trader hold? I'm reading the Mark Minervini books from your reading list, and he recommends holding no more than 4 positions to 8 positions. Do you recommend similarly? Well, this is something that each trader needs to decide on their own. But rather than number of positions, I think it will depend on how much risk you're taking in each of them. So if your risk is limited to 0.5% of your capital, 8 position is giving you a 4% risk if all the trades goes bad. So this is something that you can decide. If you're taking 30 basis points risk in each trade, that gives you a 2.4% open risk. If you're taking 1% risk, that gives you an 1% of AUM as risk in each trade idea. That gives you an 8% risk overall if everything collapses due to correlated market environment. So how much you can handle in one shot? 8%. If it is too much, then you have to have less positions or reduce the size of the risk that you're taking. Last question. Just want to make sure I understand that. Number 1, the success rate is calculated from subjectively identified inside the pattern minor price points. For rectangles, if you don't have a clean minor low inside the pattern boundary, that would be a subjective level. But all the others, be it the symmetrical triangle, cup with handle, head and shoulder, ascending triangle, descending triangle, they are not subjective. They are basically the lows inside the chart pattern that are the swing lows. In fact, with head and shoulder failures, we are basically considering reverse trade when the pattern fails. So these are not all of them are subjective. and hence the success rate showed here has nothing to do with my trading success rate, because everyone's stop level can be different. Yes, that's true. So what you can do here is that's why I categorize them into type 1 and type 2 breakout. Type 1 and type 2 breakouts, if you're using very tight stop losses just below the chart pattern boundaries, you can basically take that as the possible pattern breakout success rate, because even if you're using a tight stop loss and aggressively managing those, type 1 and type 2, those numbers wouldn't have triggered your stop. So let's read the tree. If that's the case, what's the point of calculating success rate here unless we all use that minor point inside the pattern as a stop level? Exactly. So basically, I've answered your question. Given that there are so many different profiles as our tech charts members, and each have their own strategy, and each wants a specific stop loss point to be labeled on the price chart, this is not possible. So the best we can do is formulate around chart patterns, a chart pattern negation level, and offer a perspective on those success rates with the type 1 and type 2 and type 3 breakouts. How many of those are actually, after the breakout is completed, how many of those are doing a hard retest? How many of those have performed breakout and rally, or breakout, slight pullback and rally? So those to offer a perspective, basically. And if you're using only the chart pattern negation level, you can take type 1, type 2, and type 3 breakout success rates combined to give you an idea of how the success rates have been. So I hope this answers that question. Thanks everyone for joining today, our annual review. The breakout page is being updated. Keep an eye on the latest numbers that will be uploaded. And I hope you guys enjoyed today's webinar and it was an informative session for you. Thanks, Jolene.
Thank you, Aksel. As we close this member webinar, I want to remind you about our Discuss platform that's located at the bottom of all Global Equity Markets reports. To find this section, go to Premium Members, Premium Reports, and click on any report. Scroll to the very bottom. Here you'll find the Discuss platform. Feel free to share any ideas or questions you have. There's the additional feature to be able to upload a chart. I also want to draw your attention to our educational video library under Premium Members, Educational Videos. And then all videos are organized under the subjects in this header row. Again, if you have any questions about your membership, feel free to contact me. And you can do that by clicking on the Contact under the Support tab and then fill out this form, and that goes directly to me. Thank you very much for watching. We hope you have a great rest of your day, and thank you for being part of the Tech Charts community.